The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Good morning, everyone. Basil Chapman, Tiger Technicians Hour. My pleasure to be here on this very last day of June the 30th. We'll see what kind of candle we get for the month of June. Fascinating period we're in. And the Dow is up 88 at 17,783. The S&P is up 10 at 2,081. The comp index is up 25 at 48.05. The VIX is down in the 15s, 15.47. Thereby, you have buying pressure. It's just real simple. Now, one of the things I discussed with my subscribers to my opening call was that I had a Chapman Wave trend gauge flashing yesterday, and that suggested that even if the futures were up quite sharply, the Dow should have a slight dip to negative before there's a rally. Well, it did pull back. The S&P did go negative. The Dow didn't go negative. This will be the first time, I can't even remember when the last time was, that this trend gauge is going to fail if it doesn't go negative, if the Dow doesn't go negative today. But it did. It almost did. It went to, let me just tell you right now. Let's see. Yesterday's close on the Dow. Excuse me. Oh, let me just do it this way. It's easier. Yesterday's close was 17,694, and today's low was 17,711. So we missed by 15 points. What is that? Something like that. 16 points going negative, but it did pull back, and we'll see. Look at this candle. So what I had done for subscribers was to say that if there is going to be a price time match, then there's a chance that by July the 7th, the week of the 7th, we could be seeing a rally towards the previous high of 18,011. Incredible. We're already at 17,784. So this has been a stupendous three-day move, giving back much, not all, but almost all of the huge, massive decline from Friday's opening into Monday's low. Let's get back to our story here. A couple of things are going on. You've got the Dow up 89. So now supporting the Dow is 17,760, say 630s. The 9-period exponential moving average. But if we close anywhere around here, we're way above the 17,669 9-period moving average right there in the weekly chart. This will be very good. The MACD is okay. The stochastic is not very good. So this is a fascinating period. Let me just go back to that E-mini for a moment. I just want to show you something. You can see there's a rectangle formation that's been forming. You can see a little bit better right here in the 10-minute chart. That rectangle from the high of 2074.75 made yesterday, around about 5 o'clock, pulls back overnight to the 2055 area, actually 2056.50, and rallied up to a peak C. If we take out that peak C, that'll reactivate it, and that'll become a new leg D above 2073.75. We just did it. Not only did we do that, but we're about to tackle the high of yesterday. This is extremely good action. I'm even inclined to say this isn't a D. I'm going to give it a parallel count right now. It really looks like a B. It's just buying pressure. This is the end of the month. The market survived everything. There's little reason to sell right now at this particular point. At least sell deeply. Okay, so let's get out of that. We'll go back to our story. QQQ right now is up 67 cents at 106.97, trying to go for 107.10, which is the 200-period exponential moving average. Nice V-shaped pattern there. Very strong candle hitting the 9-period moving average support. We went right underneath the key support, the dashed line. But the week is not over. So the week says got right back in, and that's good. I can now move this out of the way. Right. And what we're looking at in the weekly chart is a nice survival, because if you closed at the low of Monday, that would have been really poor. So the monthly is improved, not great, it's just improving. Let's go on. We're going to look at GC, which is gold. Gold is down about $3 at 1323. It's in this little range right here. Did make a peak D, so you can expect some kind of consolidation. Hasn't broken down. It'll break down on a short term if it takes out the 1300, 1298 support. So far, it's holding quite well. I'm still calling this leg F, but it's for a leg F. There should be a big, strong red candle this week, and so far there isn't. Let's go to silver. Well, silver had a very nice move. Look at this. Here's silver. Leg D in the daily, leg E in the weekly. Just a wonderful breakout. In fact, silver looks very strong on a weekly basis. We can go to the crude oil. We go next to crude oil. Crude oil is pulling back. It's down 98 cents at 48.92. It's just stuck in a range right now. Not sure I'd want to short it. Not sure I'd want to buy it. Just watching it for the moment. And you got parameters. A close above 50.50 reactivates upside action. The close below 47.80. This is a continuous contract. Reactivates the downside. Just keep it as simple as that. Let's go to the TLT. Now, this is going to be very interesting. Down from yesterday's high of 140.13. Let me just type that in so I don't forget that. 140.13. And we pull back. It could make a peak D today, but it's a high-level consolidation because the stochastic's at 87%. MACD is still good. How do you get these things all working in alignment like this? It's a leg E, gap up leg E. In the TLT weekly, the monthly has gone to a new high, E/C. Now, this is very strong action. Let's go to so support would be 137 to 136. Break under 136 by Tuesday or Wednesday of next week says, short-term top in bonds. That should help the market. That's interesting. So I wanted to also do this, a question about it. I wanted to do the dollar, of course, the XY. See, the dollar is holding well. Just as gold is kind of holding well, so the dollar's holding well. And it's interesting that they're both moving in unison. So this is so far a single leg A up, but it's actually good action at 95.87, up 9 cents. Because if gold suddenly slipped, if the dollar broke and closed 95.33 is a 9-period moving average support. But most importantly, if it plunges through the 95s, into the 94.70 area, that will say this could see the dollar move down sharply and gold could move up. So this is a kind of an important period right now. I think I've covered almost everything I wanted. Just other to say that KHC, remember I spoke about it yesterday. I said we were trying to buy it. We missed it by 10 cents. Today there's a story about Hershey being takeover offer of Mondelez, and all of a sudden you've got KHC up $1.80 at 87.90. What can I say? We missed it by 10 cents, and here it is at 87.91. Well, it happens. Leg E in the weekly and leg only B in the monthly because it's a brand new chart. Let's go to Scott in Safety Harbor. Scott, how are you?
Couldn't be better, Basil. Couldn't be
Good.
better.
Oh, we got the music coming up, so we got a break, and you wanted to talk about Alcoa, okay? Yeah. All right, we'll be right back. Alcoa right now at 9.14, up 5 cents. We'll be right back. Basil Chapman, Dow's up 98, S&P's up 12.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited-time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. Dow's up 91, S&P's up 10, and we're on with Scott in Safety Harbor, Florida, and we're looking at Alcoa. AA is the symbol at $9.16, up 6 cents. Scott, I'm guessing as to what you're doing.
Well,
Are you already
we've got
in?
so many things, moving parts out there with Alcoa, but before I get into that, I mean, again, it's proven cooler heads prevail. I mean, the panic, I don't care what you're doing, I'm former military or you playing tennis, you got to keep it together, people, if you're going to trade, or just get out of it if you're going to panic. I mean, I know people had sold off for losses last week. It's ridiculous. I've been saying for 10 years, no matter what happens in the world, money's going to keep flowing to us, because as bad as we think this is, Basil, and the USA, it's still considered the best of the breed. And they're going to bring all their assets here.
That I think you're right about bringing assets here, and markets have a way of being media-driven sometimes, and definitely last week was media-driven, and you can see that sometimes that's not the way to go. So you want to look at Alcoa, and I'm suggesting that Alcoa, having made, it's really like one major bottom at on the 19th of May at 878, went to a peak A, B, C, D. But this is a very, very interesting pattern. In the Chapman Wave methodology, there's a technique that I call it the restart. And what happens, you get a buy signal, and even though it eventually goes to a D, it's extremely difficult to buy and hold unless if you put in stops, because it keeps coming back close to the entry point. And it's done that 1, 2, 3. This is the fourth time that it's pulled back under 920.
I mean, you're correct. Tight stops just ain't going to cut it with Alcoa. You got to.
Yeah. So you had said,
something like that, but you can't put in 5, 10, 15-cent stops on Alcoa, because you'll just keep getting cashed out all the time.
and you've been saying that you're looking at a couple of these stocks more as intermediate term. So let me just go. I just want to talk to that issue for the moment. If I look at the weekly chart of Alcoa, the weekly chart, when it made a $6.14 low back on the week of the 22nd of January this year, it ran up to a peak A, B, and then it went to a C, just under the 200-period moving average, which is around about 1140, 1150. And then it pulled back very sharply. Now, within that, we've had a small peak ABC. When I look at that, I say, this is the pattern that says, be careful, because it could be that pattern I call the lowercase h. So that's where it says, here's where you've got to be careful. You can start a position looking more intermediate term, but you really have to be careful because it's started to make lower lows on each decline since the low of the 14th of June. That says to me that if it does take out $8.95, you've got to be prepared, even though you might be looking at 3-4 months, you've got to be prepared that it's going to test the low of 878. Now, this is very interesting because this pattern of the H pattern testing, if you look at the IBB index, that's exactly what the IBB weekly chart did. If you look at the 10-minute chart that I featured about 3-4 days ago, and I was looking at this, and I actually spoke about the IBB. I said this pattern of the lowercase h in the E-mini 10-minute chart is very familiar to me, and if it survives, having made the Elliott Wave 5, which is a separate thing, but if it survives at 1981.50, it could have a very strong move to the upside. So here we are looking at Alcoa. Will it have a successful test of the $9? Well, I'd like it to be $9, but $8.78 really is the level to watch. If it does that, it could say finally Alcoa is ready for a much better move to the upside.
Well, yeah, because exactly what you're seeing, these traders out here, you can just picture them all flipping a coin constantly. They keep flipping that coin over and over because they know, or they think they know, like I do, that Alcoa is going to jump at least $2 or $3. So they keep when it both, and then they sell out. They go up and then they get a little nervous and they sell out. But eventually, I mean, we're definitely going to be back at the 1150 range because it was 1150 without all this extra juice in it, without the trades, without the split, without anything. So
Scott, do you have a position now?
No, I'm trying to get one. I'm still in CX.
So then, why don't you you don't have to do exactly what I'm saying, but I'm just making two suggestions here. One is you either wait, you're going to give up a little bit. I'd rather be buying strength above $9.40 than be buying weakness. But if you're thinking,
I really agree in this case. You know, when it went back to the $9, a little bit before 9, people are calling me. I said no, and they said, well, why not? I'm like, well, exactly what you just said. Sometimes it's better to buy on strength.
So now I'm also saying there's another thing that you could do. If give it 3 days, that's today, the whole of today, the whole of tomorrow, and the whole of Monday. If by then it hasn't taken out the low of $8.95 that was made 4 days ago on the 27th, I would then start a small position and say, okay, you're starting to show some strength, that you can do that, or you could just nibble right now saying this isn't quite the right time, but I want to kind of be there if it starts to move up, and I don't mind being there if it starts to move down because this is just a very tentative, it's like what I call a pilot-like position. It's a position that gives you the feel of how the stock is acting.
Kind of like a tug rope. Remember the old tug rope contest? They'd have pull people in the mud and all that. And that's what I feel like. Well, I got to mention, Basil, the whole Brexit was caused by Basil Chapman to prove a point because I was upset at you that CX went up instead of down, and you said it was going to go to 560, and you caused the Brexit just to bring that stock down.
Oh, let's see. Oh, it went to 550. Well, how about that? Yeah, I wish I had that kind of power.
You caused the Brexit just to move CX. That's why you did that.
All right, so you know the plan. So I'm just saying to you, if you want to nibble now, okay, but I would rather be buying strength than Alcoa. But if you want to start, you can just nibble here. But then you got to be watching real closely between $9
I agree with you 100%,
and
and I'm glad you use that terminology, buying on strength, because some people just don't get that theory. Among others, they just don't get buying on strength. It's like Kramer said. Sometimes you got to buy high and sell higher.
Okay, so I'm going to wish you a really...
and it kept on going down.
Right. Okay, well, I'm going to wish you a wonderful July the 4th, and let's see how Alcoa is doing next week.
Thank
you for calling, Scott. Always appreciate it.
Thank you. We appreciate you very, very much. Bye-bye.
Thank you very much. So look at the SLX, folks. This is the Van Eck Vector Steel ETF. It's trading at 2702. Alcoa has been in the aluminum area for a long time as a separate entity. Steel has been in while Alcoa was running up at one point, steel did okay. But I have to tell you that when I look at the automobiles selling at all-time record numbers, 17 million, that is huge. I mean, 17, can you imagine 17 million cars a year in the United States, new cars? They have to be using this stuff, aluminum, steel. So I want to go a little bit further into what I'm looking at here in the steel ETF. I'll explain what I think might be happening, because we're looking at strength, but not great strength, but it is holding well. So we'll come back and look at the SLX. Dow up 90. Be right back. Basil Chapman, Tiger Technician Power.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, we're back. So we're looking at the SLX. It's trading at 27.05, up 50 cents. The Van Eck Vectors Steel ETF. So it's holding well. It did very well. It went from the 20th of January at 15.20, went all the way to the 20th of April to 30.74. I would say that that's a double by any standard. And after that 100% gain, it gave back about a third. It dropped down to the 2370 level on the 19th of May, and then it started a rally, and that rally was a little more than 50%, pulls back, and it's kind of been struggling, but it is treating the 200-period exponential moving average at 25.23, this coral-colored line, thick line here, as very good support. Short-term, near-term, we call it 26.51 is the 9-period moving average support. If steel at any point in early July starts to break into the 28.5, 29.30 area, that's going to make a cup formation, a ball, more like a ball formation. And that ball formation says, oh, I'm going to try to test the high of 30.74. So that's very important. So far, the H pattern, which I would draw in I just look at it and say, oh boy, H pattern, has held pretty darn well. It almost went lower on Monday. That would have been very important if instead of holding in the 25 area, it slipped into the low 24 area. But instead, it's had a bounce. So I'm watching this closely. We have no position. I was going to buy it some time ago. For some reason, I can't remember if we got in, got out, but we don't have it. But it is acting pretty well. I'm a little concerned only about the weekly chart that the peak C failure, it's taken time and it has this arch formation. So as I say, well, I'll do it again. Anything below 24.78 in this case says just be real careful because it could retest that low that was made at 23.70. All right. So I wanted to talk about the steel. I got a question about DB again. I always get this question about Deutsche Bank. Deutsche Bank is at 1367, down 42 cents. I don't see anything here that I want to buy in Deutsche Bank. Yeah, you could have a little bit of a pop, maybe a nice percentage gain. My concern with a bank like this is that if the financials come out at some point and all the pressure of Volkswagen and whatever's going on starts to be impacting the bottom line even more negatively than it probably is right now, this is a black hole. Look at the monthly chart. I mean, it's just saying there's no strength. And the all-time low was back in February of 2009 at 20.97, had a bit of a bounce, and now it's trading at 13.68. If you're asking about Deutsche Bank only as a proxy for other things, Bob, that's fine. But if you're thinking of it as a trade, I would say to you, you might be able to get a fabulous percentage going from 1366 with a double bottom here to a spike up to the 16 area and get yourself a 16 to a 21% gain. But if it starts to fail, you can turn a short-term trade into a long-term buy and watch go lower hold. So I'm just be real. So be careful. But now if your question follows through, that you're also looking at Goldman. You see, in this case here, Goldman is rallying a little bit. It isn't looking very great. In fact, it's making a triangle formation on the bottom, which says two things. It says, that's Goldman Sachs, took out the low of the February the 12th, the week of the 12th, 139.05. I went to a peak C minus. Peak C minus invariably, by its very nature of calling it a peak C minus, says, I'm going back to retest the lows that were made, probably going to break it. That's what a C minus does in the Chapman wave methodology. So now look what's happened. It went to a low on Monday of 138.20. No big deal, just a little bit lower than that 139. But it also then on a weekly basis used this candle to rally. So when I look at this, I say, okay, remember, I like to look at chart patterns and say, it's fascinating that chart patterns are fractals and they repeat in weird thing. Look, the 10-minute chart of the E-mini, the IBB, one of the worst sectors around, plummets from the 400 area down to the 240s, and now it's up to 257, but it made that double bottom. And now you've got Goldman on a weekly basis making a potential double bottom, and it's close to my target of 137.35, the 200-period exponential moving average. So if ever there was an opportunity, this is different for a beaten down bank or financial sector stock to move. I would say Goldman right now is a much, we're talking about completely different prices, talking about one being 10 times more than the other. Not the point. Don't buy that many. But Goldman is a better deal because it has this double bottom pattern that so far is successful. And if all of next week, instead of testing the lows of the 139, 138 area, it actually hits the 151, let's call it 9-period exponential moving average of the weekly chart and closes above it any day, not even the week, but any day next week, Goldman has the potential to move to the 164 9-period moving average if this market is going to test the old highs. So this is a better risk reward. That's what I'm looking at right now. And to do that, I also need to look at the XLF. There's the XLF. 3 days of nice move, a very strong 2 days, and then a nice follow-through movement from the 9-period moving average today. I think that the banks, this is a very important moment, because if next week, instead of what a lot of people, what I'm reading and hearing, think that next week's going to be a smash to the downside, if in fact we just get a sudden pullback or no pullback, where we start to break it, the Dow's already at 17,800. I'd said if the Dow gets to 17,400s, that's good. But if it gets to the 17,600s, I have to consider upside more than downside. That's number one. Number two is if the volatility index, and look at this, we've got a Friday close coming up, we've got a monthly close coming up, and look where the VIX is. It is way under all the moving averages in the daily. It is way under all the moving averages. It's got their typical peak C- failure pattern in the weekly. And the monthly is under the 9-period exponential moving average of 1654 and way below the 1974 200 period moving average. Let me just get a sip before. Yeah. That's very important. So what we're looking at here is that the volatility index, the steepness of the 26.72 to the 15.78 decline in 4 sessions is extraordinary, and it speaks to buying activity. That's why we wanted a new short today, but we've also got long positions. Oh, talk about long positions. I don't know if I mentioned this. KHC, did I mention this? KHC, which we missed by 10 cents. Yes, remember I had a little discussion about it. I said, it's looking like a good chart. And if it breaks out, I have no choice but to call it probably a new leg A to the upside. How could that be? But the weekly chart would be very strong. And the monthly chart is still in leg B, even though it's a spin-off. So it's joined, the Kraft and Heinz joined. Now, I'm looking at this and I'm saying, wow. So Mondelez, there's a story coming out that it's going to take over Hershey's. I had Hershey's all notated. What a pity. I don't have it notated anymore. But it went to an A, B, C, D, E and looked like it was pulling back. And then bam, we get this offer today. It hit 117.79 and yesterday closed in the 97 area, 96 area. I'll be right back. Basil Chapman, Target Recognitions Hour. Fascinating session, wouldn't you say? I'll be back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks, we're back. So a couple of things. I just wanted to go through this. Soybean continuous contract made a peak F top in the Chapman wave back in June. I think it was the 5th or something like that. June the 10th. Pulls back sharply. It's trying to have a little bit of a bounce, but so far that bounce looks more like it needs time. And the weekly suggested it needs time, having made a peak D. If you look at corn, and of course, these are not areas I trade. These are just areas that I always do notations on as exercises more than anything else. Made a peak F right there. And that was on the 8th. And that was 8th of June at 443.25. And it's plummeted, made to that Eiffel Tower. I'd be real careful. I wouldn't be touching corn right now, but let's see how it retests that low. It's the same pattern we're looking at of testing the left side low. Patterns are repeating, and they're repeating it all different. I'm always fascinated that they go from a commodity to, in this case, biotechnology to an E-mini chart of 10 minutes. But that's what's been happening, these double bottoms. It's very, very interesting. Now, if you look at sugar, I showed this the other day, and I can't remember if I showed it in the den, if I showed it live here, and it had broken out, made a peak F top, and that could have been an alternate count. So it's now in a G/C and a leg F in the weekly chart, but this F could in fact turn out to be a C. This is very interesting when you get your parallel wave counts, because the major, in this case, the major weekly chart, the middle one right here, has still got good technicals. So in this particular instance, I'm looking at it and I'm saying, hey, this is very interesting. High level consolidation. It's got 1815 as the key support of the 20-period moving average. Got resistance in the 21s. Could go a little choppy right here, but it's fascinating that with all this talk about sugar and don't this and don't that, sugar is at recovery highs, huge recovery highs, going from the 11 to 11-12 area to the 2021. I mean, that's big. If you look at high-grade copper, excuse me, high-grade copper is in fact in leg D, which is a good sign. It's another sign, with all the Brexit and everything. Yes, copper going off the lows, ignored all that noise, and now is bouncing nicely within the trading range. I'm just saying I wouldn't get too carried away about copper, but I'm pleased that it's had this leg D almost at the 221. 200-period exponential moving average resistance is at 218, and the technicals are really improving in the daily. The weekly chart is, it's just improving slowly. So questions in the den. Let's see. The ESU 6-hour chart in leg B up. Do you expect this rally to extend such that Chapman wave leg D counter? Yeah, good question. Occurs before topping. Let's go to, if you don't mind, I'm going to go to two of them. Let's go right here. We'll go to the 120 just for the moment. I got a 300, but I want to go to that later. So this is the ESU 16. There's typing it on the chart. Let's type it onto there it is. ESU 16. There we go. So this is, it just broke out. So there's a good likelihood that I can call this a leg G/B in the 120, G/B. But these rectangle formations are quite formidable. Remember, I look at patterns, and I always say patterns repeat longer than, especially rectangle formations, can repeat a lot longer than your patience. And I'm going to suggest to you that this rectangle formation right now is going to be in place, and we might even see it on Monday, that we're still within 2082, let's call it, in the E-mini as a resistance area, and the 2065, 2060 area as support. It's just chopping around within that as it takes a breather. So that's the 120-minute chart. Let me see if I'm able to get my 300-minute chart. I think I've got the NQ on I always keep it there because we have one of the dinners who uses that fantastically, just trades the Chapman wave plus a couple of other techniques, and he's just been tremendously successful. So this is the NQ, which is in leg B. Let's go to the ESU 16, also in leg B. Yep. Okay. This is what we're looking at here. This is A and this is B. When I see patterns that make a V-shape recovery, and then they stall on the right side, and they only make a peak A and then just a nominal B, it usually says it needs a little bit, that matches that rectangle formation. It needs a little bit of time to build strength to be able to break to the upside. But I can tell you this right now. If there is a close under 2057s is the 9-period exponential moving average, the black line. But if there is a close below 2055, that's 200 points in the Dow down. I don't know if we can do that. I'm just saying, if that's the case, if there is, be real careful, because we could get an arch formation. And then we could start moving down quite sharply. And if we put that together with crude oil, look what's happening with crude oil. Crude oil made a leg A, single leg A, and then failed. It didn't take out the high that was made back on the 23rd. No, sorry, on the 23rd. Of 50.45. This is a continuous contract. And therefore, what's really important, if crude oil starts to take out 48.40, and then closes under 48, you've got time and price on the downside you've got to be careful of, because you're making lower highs and lower lows. So let's just make that real clear. And I'm going to go straight to Charlie and Elion. Is that Montana? Hi, Charlie. How are you?
Very good. I'm looking for BGG, Briggs & Stratton.
Oh, BGG. I haven't looked at that in ages. Briggs & Stratton's up 45 cents to 20.89. Let me ask you a question. Have you got a position in this, or are you just looking at it?
No, I'm looking at it. It was $20 a few days ago. It pays a very good dividend, and I'm hoping for a natural disaster, and that'll increase sales.
Okay, so wait a minute. Why Briggs & Stratton? Those are the like lawnmowers and things. Do they make bigger engines than that?
No, they make generators too. They have a whole, they have a whole bunch of
okay, they generate. Okay, so all right, I'm going to, if you don't mind for the moment, I'm just going to ignore any disaster because the chart hasn't got a little notation saying on the 7th of January, July, there's going to be, you know what I'm saying? So let's bang. But it has held the 200-period moving average in the weekly chart, and it's funny because I don't know why it's not notated. I had this all done about 2 months ago because I thought, okay, we've got the spring coming up and all that, and we've got to look at the spring, the seed companies and all that, and Briggs & Stratton was there. But I looked at it, and yet it took a dive, and it hasn't done very well. So I'm going to make the suggestion to you. I love the action over the last 2 days. I love the fact that it's within just a fraction of getting above the 2103. It's a 20.91 BGG, up 47 cents. Just a fraction of breaking.
One question.
Yes.
There's a gap on from December 1997. Will that be filled or not? It looks like it's going to get filled.
The gap.
There's a gap.
Yeah, but I would go one gap at a time. We've got a gap from the July 1st tanking. You remember last, when was it? June the 1st. The June the 1st, you know what? We've got a break coming up, and I'm going to take a moment. I want to notate this because I'm going to make a recommendation that you actually start a position. You could do it right here, but let me think it through, and I'll be right back. We've got Charlie and Elion, Montana, and I'll be right back. Dow's up 114, S&P's up 12. Basil Chapman, Tiger Technicians out. We'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. Just in time. I just finished doing all the monthly, weekly, daily chart. I spent a little time actually doing a bunch of other things on the chart itself. I'm going to make the suggestion, Charlie, that at this point it looks to me like the 20 level should be very strong support. So if you want to put a stop in of $1, I would start a position right now, and I'm going to do two things. I'm going to say start a position at 20.89. One of the reasons being is that the candle, if we close like this, the candle that I'm looking at in the weekly chart if there is a close another within 2 weeks without taking out the low, if there is a close above the high that's made today on this candle, I would recommend that if it's possible and you're able to call me next Tuesday or Wednesday, let's look at it again, because this candle has the potential to act like a spring-loaded push to the upside and give it the potential, at least, to go right into this ugly candle of June the 3rd, the week of June the 3rd, and get to the 2240 level. It doesn't give you a time. It says within about 3 to 4 weeks, if it can close. And I'm going to make it real clear. It has to close. Today's high is 20.97. Let's call it a close above 21 on a weekly basis. But any day of the week, if it closes above 21.40, it's already starting to do exactly what we're looking at. So I'm going to recommend start a position now. No, don't get carried away. Just start the position. And we're going to have to watch, because 2066 really is very important support. But if it's holding between 2066 and 2044 and then pops to a new recovery high and gets above that candle of the 21st, above 2103, I think we've got something here that has the potential to move higher. So yes, I do like it. Hope that helps you. So that's Charlie, and let's hope that he's listening. And I'm not sure if he was cut off or anything. So Charlie, in case you are listening on the Tiger TV, I do recommend starting a position, have about a 1-point stop, and that I think it's looking quite good. That's Briggs & Stratton BGG. So let's do this. We're going to wrap up to take you over to the swim lesson. Great options show, folks. Just terrific. I was thinking, because so many, now I'll talk about it tomorrow in Tiger Technicians Hour. We have some fabulous, really fabulous analysts here at TFNN. Every show I listen and I'm saying, God, what nice technique. What good technique that person has. I'm impressed. I think we've got a fantastic lineup here at TFNN. Hope you agree with me. So here we go. The VIX index is at 1577. That's giving buying pressure, as far as I'm concerned. That is a very big positive. The fact that it closes this week, if it does, below 1726, the 200-period moving average, really important. If it closes below 1660, which is the 200-period weekly, that's very positive as well. And then, of course, the monthly will be today. So we've got to wait for tomorrow for the close. But so far, it looks like this is good action in terms of buying pressure. Doesn't mean to say we aren't ready for a bit of a pullback. So let me run this right here. I'll go to this chart. This is, we even went higher than that leg A. This is the chart that says now the 17660s is very good support, maybe a little bit lower, 17640s, somewhere in there. A deeper slide underneath 17,600 would say, uh-oh, a little carried away there last week. We're going to have to take a little more time to build the base. So far, this is very good action. And it says if there's a left side, right side price time match, we could get to 18,011 by next week sometime. Wow, I'm impressed. Okay, so that's the story there. And I've given you the parameters. And all I want you to say is within the context, I had another question about the UK. Let me just do, running out of time. All right, I'll do that tomorrow. I'll spend a little bit more time, and we'll be looking at the GBDOW, because that's the way I get it. Whoa, it's just about to break out of the high from the 24th. Very good action in Great Britain right now. Very nice. Okay, have a wonderful day. I'll see you tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.